Banks made over $33 billion last year just from overdraft fees most people never expected. The average person impacted by overdraft fees pays around $420 in charges every single year. Turning off one bank setting today could save you that full $420 every single year. In this video, we will cover discovery, the fix, the evidence, and your action steps. We will also handle the biggest objections so you feel completely confident making this change. My name is Ryan, and I spend way too much time thinking about personal banking. If you have ever been blindsided by a surprise overdraft charge, this is for you. I break complex money topics into clear, practical steps that you can act on today. Maybe you check your balance and it is lower than you thought it would be. You did not overspend on purpose, but there is a $35 fee on your statement. That fee is not a budgeting penalty. It is literally a product your bank sells. Here is what most people miss. Overdraft protection is optional, and you opted in automatically. A single overdraft day can generate up to $420 in fees from just 12 transactions. The fix feels counterintuitive because turning off protection sounds like removing something helpful from you. Banks enrolled most customers into overdraft coverage as a default setting starting back in 2010. The default setting persists unless you take active steps to opt out of overdraft coverage. Banks earn more money from overdraft fees than from interest on most standard checking accounts. Most people assume overdraft protection works like insurance, catching falls so you stay financially safe. Instead, it works more like an expensive loan with fees, not a traditional interest rate. On a $3 coffee that overdrafts, a $35 fee equals roughly 1,167% interest annually. Frequent debit card users are the most at risk, often accumulating multiple overdraft fees weekly. Studies show that just 12 overdraft events in a year equals that $420 average figure. That is $420 that could pay a utility bill, a car payment, or groceries instead. So how do you stop it? Your complete answer to this problem arrives right now. You are not wrong to feel frustrated by all of this. In just a few clear and practical steps, we can completely change this trajectory. Most people think the real problem is running low on money, but the actual driver of the $420 cost is a checkbox you never saw. Overdraft coverage is not protecting you. It is billing you on every shortfall. The single step that flips this trajectory entirely is opting out today. Once you opt out, your debit card will simply decline when your balance is too low, and that specific decline will cost you absolutely nothing. Step 1 is to identify whether you are currently enrolled in overdraft protection on your checking account. Most people are enrolled and have no idea. Step 2 is to verify your current overdraft enrollment status. Log into your online banking portal and navigate to your account settings or services tab. Step 3 is to locate the overdraft toggle and switch it off. If you cannot find it, call your bank and ask to opt out. Step 4 is to ask your bank about cheaper or completely free alternatives, like linking a savings account to serve as your backup funding source. Step 5 is to set up a low balance alert at $50 or $100 so your phone notifies you well before any shortfall can occur. If you prefer to avoid apps or alerts entirely, just checking your balance every Sunday morning is a completely reliable habit that costs you nothing. These 5 steps take less than 10 minutes to complete, and the savings begin immediately on the very next transaction you make after opting out. Before opting out, a customer who overdrafts just 12 times per year at $35 each time loses exactly $420 in what are essentially junk fees. After opting out, the same person pays $0 in overdraft fees because card declines now replace what the bank once converted into expensive fee events. Even if you only overdraft 3 times a year, opting out still saves you a full $105 and takes only about 10 minutes to complete. Over 5 years, 12 overdrafts per year at $35 each will add up to $2,100 in fees that produced absolutely nothing of value for you. That same $2,100 invested in a basic index fund at a 7% average annual return would grow to approximately $2,950 over that same period. The downside risk of opting out is a declined transaction and a moment of mild inconvenience, not a financial emergency or a ruined credit score. Here is the number that surprises most people. The average overdraft customer has been enrolled for over 8 years without ever actively choosing to be. 8 years of 12 annual overdrafts at $35 each comes to $3,360 sent to your bank for a service you never deliberately signed up for. Now I know what some of you are thinking right now. What happens when I genuinely need my card to go through in an emergency? That is exactly the right question to ask, and the answer involves a backup strategy that costs less than $5 per year to maintain. Objection 1. What if the card declines at a critical moment like a gas station, a toll, or an urgent medical payment you cannot delay? The pragmatic answer is to keep a $200 to $300 cushion in your account, which most people can build in just 1 to 2 months. Objection 2. What if you have already been charged this month? Call your bank and ask for a courtesy reversal. Most banks will say yes. Objection 3. I use overdraft as a deliberate safety net. In that case, linking a savings account achieves the same effect for nearly zero cost. Here is your action checklist so far. Confirm enrollment status, toggle it off, set a balance alert, and link a savings account as your backup. That checklist takes under 10 minutes to fully complete, and the financial benefit starts on the very next transaction you make after opting out today. Now, let us go a little deeper into exactly how banks deliberately design overdraft programs to maximize fee revenue from their most financially vulnerable customers. Banks process transactions in a specific internal order, and that order is not always chronological because it is engineered to generate more overdraft fee events. Some banks reorder your transactions from largest to smallest, which drains your balance much faster and creates multiple individual overdraft fee events in a single day. The Consumer Financial Protection Bureau has documented this practice, calling it a deliberate design choice that generates billions in annual fee revenue for large banks. This means your $35 fee is not an accident or a random outcome. It is a completely predictable product of how your bank's system works. Knowing this completely reframes the situation. You are not bad with money. You were placed into a system specifically designed to extract fees from you. The quantified payoff of opting out is significant. Over 10 years at $420 per year, you recover $4,200 and reclaim full control over your money. That $4,200 invested over 10 years at 7% grows to roughly $5,800, meaning the real cost of inaction is closer to $6,000. If this breakdown is saving you real money, subscribe and hit like so I can keep delivering practical financial breakdowns for you every single weekday. Now let us look at 2 real U.S. case studies showing how 2 different people changed their financial outcome by opting out of overdraft protection. Case Study 1. Marcus, a 28-year-old restaurant server in Atlanta, was averaging $455 per year in overdraft fees spread across roughly 14 individual overdraft events annually. Marcus called his bank, opted out in 7 minutes, and linked his $400 savings account as a backup, which ended his overdraft fee problem completely. In the 12 months following his opt-out, Marcus paid exactly $0 in overdraft fees and redirected that full $455 toward paying down a credit card balance. Case Study 2. Diana, a 41-year-old schoolteacher in Phoenix, had been enrolled in overdraft protection for 9 full years without ever actively choosing to be. Diana calculated that those 9 years had cost her approximately $3,780 in overdraft fees, which equates to almost a full month of her take-home pay. After opting out, Diana set a $150 low balance alert and experienced 3 card declines in the first month, none of which caused any real problem. By month 3, Diana had built a $300 buffer in her checking account and experienced 0 declines, proving that the adjustment period is genuinely short. Both Marcus and Diana came from different income levels, but reached the same result, 0 in annual overdraft fees within 90 days of opting out. Their stories prove that this change is not income dependent. The only deciding factor is whether you actually take 10 minutes to make the opt-out work. Now let us address the most common objections and alternatives people raise when they first consider turning off overdraft protection on their checking accounts today. Objection: some banks charge a transfer fee for savings backup. At $10 per event, that cost is still $25 cheaper than a standard overdraft fee. Objection: I live paycheck to paycheck and cannot build a buffer. Start with $50. That one cushion alone prevents the majority of overdraft fee events. Objection: no online opt-out exists at my bank. Call the number on your card. Federal rules require all banks to honor your opt-out request today. Alternative: if overdraft fees still feel unavoidable, consider switching to a credit union or online bank that offers zero-fee overdraft policies as a standard feature. Banks like Ally, Chime, and many credit unions have already eliminated overdraft fees entirely, meaning you can keep your debit card while losing the fee. Switching banks is a 2 to 3 hour project that pays back over $400 per year. You do not need a perfect moment to begin this process. Notice what changes when you reframe this. It is not about willpower. It is about removing a structured fee-generating mechanism entirely from your financial life. The strongest alternative to opting out entirely is setting up a small credit card with a $500 limit dedicated exclusively to genuine financial emergencies only. This emergency card sits unused most of the time, but it ensures you are covered when a genuinely urgent payment cannot wait for your balance. Here is your 4-step action plan with clear timelines and specific dollar milestones so you can accurately track your real financial progress from day one. Step 1 happens today in 10 minutes or fewer. Log in, find the overdraft setting, switch it off, and screenshot the confirmation for your records. Step 2 happens within the first 7 days. Set up a low balance alert at $100 so you receive a notification before any shortfall can develop. Your week 1 milestone: confirm the overdraft toggle is off and your balance alert is active. Both steps protect you starting on that same day. Step 3 happens within 30 days. Link your savings account to your checking account as a backup transfer source with zero or minimal transfer fees. Your month 1 milestone is to build a $100 buffer above your typical lowest balance. That cushion becomes your reliable, practical safety net going forward. Step 4 happens within 90 days. Review your prior quarter's statement and confirm that the overdraft fee line shows exactly $0 charged to you. Your 90-day dollar milestone is $105 saved minimum at 3 overdrafts avoided, rising to $420 saved if you were at the 12 overdraft annual average before. At the 12-month mark, your confirmed savings target is $420. Write that number down right now so you can hold yourself accountable at the end. Track your progress quarterly by reviewing the fees section of your bank statement for 5 minutes. A 0 there means you are winning this completely. This plan needs no budgeting app and no complex tool. All it takes is 1 phone call, 1 toggle, and a small, achievable savings goal. These 4 steps work regardless of your income, your bank, or how long you have been enrolled in overdraft protection without knowing it was optional. Now let us recap the core insight from this entire script so nothing gets lost before you close this video and go take action today. Overdraft protection is a default opt-in product that costs the average enrolled customer $420 per year, generating over $33 billion annually for the banking industry. The fee is not a random outcome. It is a system-level design decision built to generate revenue from customers who rarely question the default setting. You have a federally protected right to opt out at any time. Doing so does not affect your credit score, account status, or existing balance. Risk reminder: opting out means card declines will replace overdrafts. Prepare by building a $100 buffer and setting alerts before you close this video today. Risk reminder: if you rely on overdraft as a safety net, link your savings account or open a small emergency card before opting out today. These reminders are not reasons to delay. They are simple preparation steps that make opting out a smooth, stress-free experience for any checking account holder. You now have everything you need. Open your banking app right now, turn off overdraft protection, and start taking back your full $420 starting today.